Fed decision later in the week is eyed. But let's take a closer look at what is happening in the equity markets. Smriti?
Yeah, it's a bit of a range-bound day actually, Alex. If you look at the benchmarks, they're moving pretty much in that 100-point range or so. The Nifty 50 is down about 0.2%, a little bit in the red there. But let's look at some of the constituents of the Nifty 50. And if you look at the constituents, you have the likes of Tata Steel, JSW Steel that are kind of on an uptick today. Now, this comes on the back of China data. We've seen some positive cues from there, and which is probably why we're seeing all the steel names rather kind of up today. If you look at the metals index itself, it's up about 1.5%. As we speak, 1% right now. Then among the other sectors, Nifty Media, Nifty Auto. Auto is one of the sectors that is in focus today, and we'll talk about it a little bit more in just a bit. But Nifty Media is up about 0.8%, Nifty Energy up 0.3%. Among the laggards within the sectors, we have Nifty Realty and Bank that are down about 0.8% or thereabouts, both of them. But let's talk about some specific stocks as well that are in focus today. Now, apart from auto ancillary stocks that are in focus because of the EV policy that came out on Friday, there's likes of RailTel that's up about 1% in trade. Now, this comes on the back of order wins in the last a week or so. They've won orders over 600 crore, and the stock is up about 12-13% in the 1 week. In last couple of days, last 3 days, if I'm not wrong, itself. Then you're seeing the likes of Torrent Power that's also up after they won the solar and wind project energy letter of acceptance there of about 3,600 crores or thereabouts. And yeah, that's pretty much the picture.
Yeah, in fact, let's pull up a few more. Let's look at LIC as well, because Life Insurance Corporation of India was reacting in trade. There is, of course, an update from the government. The government has approved a 17% overall hike in wages for more than 1.1 lakh employees, and this stock is down about 2% or thereabouts. That's cost going up. I also want to focus on the automotive pack. As Smriti was pointing out just a short while back, the updated EV policy is out, and it seems like the focus and the thrust and the beneficiaries are going to be not the original equipment manufacturers, but more from the auto ancillary space as the move towards electric mobility gains traction. We've got Puneet Javeri joining in to give you some perspective on what this is all about and why we're saying that the auto anchs might benefit. Puneet, what can you tell us?
Hi, thanks Alex. And you correctly said that this EV policy is to attract global EV players in India and will also test they want to test the markets before getting into local manufacturing, and the government has given this to them. Now, currently, as per the policy, there's a 3-year timeline to the manufacturing facility for them to achieve localization of components up to 25% and 50% for 5 years. Now, this is very, very key for these auto ancillary space, as this will increase the kind of demand for these particular products of which they offer. Currently, the domestic value addition or localization target, as I said, would be a direct beneficiary for these ancillary space. In working with the brokerages, Nomura sees Sona Comsters as one of the key beneficiaries of this, as they have 28% revenue share for their EVs, and this is set to increase going forward. Sansera Engineering, which has 18% order books in this EV space, is another key beneficiary according to Nomura. And finally, Motherson Sumi, this is no news that they are one of the biggest auto components makers in India with 25,000 crores of revenue, and they are one of the key beneficiaries as well. Finally, MK also has a different perspective, as they have taken the second Motherson company, which is Motherson Sumi Wiring, as a better proxy play in the PV story. And finally, Bernstein also has affirmed Sona Comstars as one of the key beneficiaries.
Thanks so much, Puneet, for getting us those details. Gaurang Shah as well as Rajesh Palvia are joining us this morning. Gaurang, coming to you on this EV policy, it's something that has been in the works for some time, and I guess to a certain extent one could expect that it'll take a few years to fructify. Having said that, what according to you are the best plays to take on right now if you think that this will play out over the next 3 to 5 years?
Thank you, Alex, for having me on the show, and morning to all of you also. It has always been interesting auto sector, especially post the semiconductor chip and supply side logistic issues becoming a thing of the past just around pandemic and post-pandemic. Have been positive on autos, two-wheeler, three-wheeler, four-wheeler, commercial vehicle, tractor, agri equipment on a selective basis, including some of the OEMs as well as tire and battery manufacturing companies. Now, fact is, Alex, that the government's policies are laid down towards making India one of the topmost manufacturing hubs from number three position, I believe, to number one or number two. And if that has to happen, then I think plenty of known large names would want to come and set up establish their manufacturing facilities in India. So this is not new. Even in the past, we've had names like Ford and Chevrolet who had come to India, but because of certain reasons, they had to wind up and go back. Having said that, four-wheeler passenger vehicle is where the first like is going to be. Tata Motors, M&M, Maruti is the preference of selection in terms of investment idea. And I think in the OEM segment, you have names like CI Automotive, Uno Minda, Bosch. In the battery manufacturing segment, you have names like Exide Industries, Amara Raja Automotive. And in the tire pack, two names that I can think of immediately is Apollo Tires and JK Tires. So, and all these three sectors are counter dependent on each other.
Right, got it. Good morning, Gaurang and Rajesh. Let's start off with the questions now. The first one is from Chandra from Bangalore, and they're talking about Lux Industries. Now, Rajesh, Lux Industries has been in a bit of a downturn. If you look at the last 1 year returns as well, it's lost 12%. Now, Chandra has bought the shares at 1900 levels, and it's currently trading around 1100 levels or thereabouts. What would you suggest exiting the stock, and what kind of levels would you suggest here?
Good morning. So stock is in corrective move. If we look at the longer term time frame, also stock is in downtrend only. Series of lower top, lower bottom formation is taking place on monthly as well as on the weekly chart. That clearly shows that stock may continue furthermore downward momentum from here onward. Also, this is the third consecutive year where stock is forming lower high low formation. That clearly shows that there is a sustained supply pressure is taking place on the longer term time frame. Stock is trading below to all its long term moving averages. Looking at the overall structure, we believe yes, one should exit in this stock. If you get any opportunity in pullback towards 1200, 1240, 1250 kind of zone, one should try to exit from this stock, as long term structure for the stock is in the weak zone, and I don't think that a big up move we can expect in next another 5-6 months. So I think stock may remain under pressure only. So in pullback, our advice would be to exit from this stock, and they can shift their investment in some other stocks.
All right. Do you want to very quickly suggest what stocks they might switch into, Rajesh, at this point?
I think one stock that I like at current level is Geo Finance is looking promising. I think that stock is showing good traction in terms of buying, and looking at overall structure, we believe that this stock can exhibit good amount of rally in coming months. So Geo Financial is a stock where he can buy and accumulate if you get any opportunity in decline towards 345, 330. That's the range where we advise to buy and accumulate Geo Finance for upside target of 400, 450.
Quite considerable upside as well. Surya from Bengaluru has got the next question. If you get a chance, he's saying he'd like a view on Equitas Small Finance Bank as well as Utkarsh Small Finance Bank, which he's planning to hold for the next 2 to 3 years. Generally, Gaurang, when we're talking about this space, we focused on the lenders and particularly the private lenders at that. And of course, from the public sector space, we focused on one or two. What would you say about the small finance banks?
So, Alex, the best part about small or microfinance company is that, first of all, the ticket size is very small, and hence the run rate of return of principal and interest is almost about 90% plus. Firstly, a disclosure on Equitas Small Finance Bank, we have a buy recommendation. And for Utkarsh, if I'm not mistaken, Alex, we had a subscribe IPO note from a long-term point of view. Other than this, we are positive on couple of other names: AU Small Finance, Ujjivan Small Finance, Credit Access Grameen. And my sense is that the credit demand going forward into the future with the policies that the government has laid down is only going to highlight in the elevated disbursements as far as loan book is concerned, which translates into profitability with margins getting expanded. So remain extremely positive on the small stroke microfinance companies.
All right, Gaurang, next question is from Shikha on Devyani International. Now, she says she's bought the stock at 125 levels. Is there any target for this stock, and would you suggest accumulating at this juncture?
Smriti, honestly, I don't recollect having a standalone coverage. We might have had an IPO note, though I'm not too sure about that. And in the entire, this QSR, etc., the competition is getting elevated to a great extent. No specific comments on Devyani because I don't recollect having an IPO note or an independent fundamental recommendation. But this is just a suggestion in the sense that if you are concerned with the kind of performance, then in the e-commerce segment, Zomato is something that we are positive on. In fact, after the third quarter numbers, we have increased our target price to 175. This, of course, if the investor is willing to take a switch.
All right. Thanks, Gaurang, for that. So Zomato is the pick that Gaurang is talking about. But Rajesh, specifically on Devyani International, would you suggest accumulating at this juncture? And what kind of upside are you seeing in the stock in the next maybe a year or so?
So still, stock is in downtrend, and the kind of supply pressure which we are seeing since last couple of a week, that clearly shows that further more downtick we can see in a near term. The major support area in this decline is placed at around 140, 135 zone. That is the multiple support area on a longer term time frame. So I think if we get these kind of dip in near term as the mid cap space is still volatile, and a lot of supply pressure is coming in mid-cap space. So I think Devyani, if you get opportunity to again average out around 140 level, then you can average out around those level to play some pullback trade. In the pullback, again, 175, 180 is the key resistance area. If at all stock manages to cross 180 level, then we can see a big up move towards a 220 kind of zone. But till the time, I think our advice would be to buy and decline towards 145, 140 zone. Keep your stop loss at around 135. In pullback, try to book some profits around 180 zone and review your position. If it's give breakout above 180, then you can hold some position for 200 to 220 target.
All right, that's a view on Devyani International. We did speak about EVs and automotive. We've got a specific question from Karthik from Vishakhapatnam. He's asking about pre-call. Do you have a view on this one, Gaurang? He's bought at levels of 399 or very close to 400 levels. He's looking for a view on the fundamentals and the technicals. Do you have a view on the fundamentals?
Pre-call, no, Alex, we don't have coverage.
Okay, fair point. Rajesh, what do you do with this particular stock, right? So he's lost a little bit of ground. It's trading very close to the 350 level. Should he hold on to this?
So long-term structure is bullish, Alex, and looking at this corrective move, stock almost corrected near to its 200-day moving average, and some pullback action is already visible in the stock prices. Looking at the longer-term time frame, yes, we do have a bullish view based on the technical. 325 is the key level on the downside. Till the stock is holding above 325, I think trend is likely to remain on the bullish side for longer-term time frame. Though in this corrective move, stock is now slipped below to 20-day, 50-day moving average, which is now placed at around 380, 385, 390 zone. So if in this pullback, stock manages to cross above 390, yes, there could be another round of buying interest we can see in the stock, and then possible stock can move beyond 400 kind of level also. So at this moment, hold the position with stop loss of 325.
All right, we'll slip into a short break now. Stay with us, Gaurang and Rajesh, and viewers, we'll take more questions on the other side. Welcome back. You're tuned into Ask Profit. Let's start off with the questions again. Now, the next one is on NTPC. This one's from Hiren. Now, he has already bought 500 shares. He has not given the buy price, but this is for the 6-month period, Rajesh. What kind of returns are you expecting based on the charts from NTPC?
Smriti, we have seen a significant corrective move in the stock in recent past, and looking at the overall structure, we believe that now stock is approaching to its important support area that is placed at around 305. That is support area on the weekly chart of its upsloping channel. So if at all in this corrective move stock manages to hold above 305 level, then possible pullback action we can see in the stock, as overall long-term structure is on the bullish side only for the stock. So 305 is the key level to watch for in this decline. One can keep that stop loss to hold the position. On the higher side, 345 is the immediate supply zone for the stock. Once the stock crosses those levels, then possible target on the higher side we can see towards 370 to 380 also on the NTPC. So hold is the advice at this moment with stop loss of 305.
Right. Action in the power space, in fact, in the renewable space as we speak this morning. But the next question from Satya, he's asking about a switch from TTK Prestige to Finolex Cable with the view of the next 1 to 2 years at the very least. Gaurang, on the fundamentals, do you have a view on this one? Of course, completely different sectors.
So Alex, we have coverage on both Finolex Cables as well as Finolex Industries. Not too sure about TTK, where the investment is currently. But if you look at the performance of Finolex Cables, I think that's been a better performer in terms of last 1 year performance. And on the earnings front also, this company has been a shade better than what Finolex Industries has delivered. So, but we have coverage on both cables as well as industries.
So the advice is to buy?
It is definitely yes, Alex.
Okay.
All right, next up, we're talking about Asian Paints. Now, we have 2 questions on that. Now, the first one is from John, and this is from a longer term perspective, Gaurang. Now with the entry of Birla Opus, more competition for something like an Asian Paint. But brokerages continue to believe that it won't affect Asian Paints as much in the longer term, maybe a little bit in the short term, but not as much in the shorter term. So would you suggest holding on to, or in fact accumulating Asian Paints at the current price level? It's down 1.3% as we speak.
So Smriti, we have been positive on Asian Paints, Kansai Narrowleg, Berger Paints for a pretty long period of time. We had a similar competition coming into cement space when Adani started to foray into cement. And competition coming in is always very healthy as far as the consumers are concerned. And it also brings in a very balanced level field in terms of diversified product offering. And the consumer is at the liberty to choose that. We are maintaining a target of 3,300 on Asian Paints from a long-term point of view. So if you got in at higher level and because of this news, the correction that we are witnessing, if you have investable amount, you can average it out. If you want to invest afresh, our recommendation would definitely be there. And this is one of the established players in the paint industry, not only in India, but even in the overseas market.
All right, so Asian Paints, Gaurang is positive on it. I'm coming back to you, Gaurang, on this next one because we've got Titagarh Rail that Shri Kishore from Motihari in Bihar is asking about. He's bought at levels of 225 just about a year back, in fact, a little more than a year back in January. And he's looking to hold for the next 2 years as well. The question is, look, we've seen a big run up in these stocks and they continue to run every time we see an order. But I guess the big question is on execution. Do you continue to hold based on the expectation that the space is going to run up, especially in the next 5 years, the incumbent, if they come to power again, they've laid out the roadmap?
Alex, first of all, I'll give you a comment on the entire sector which is associated with Indian Railways, whether it is private or government-owned companies. And these companies are going to perform for a pretty long period of time because all the changes and the policy decisions that the government has taking the railway ministry to confidence and implementing it at the ground level. So it's not like 3 months, 6 months. Then, any stock, whether it is railways or otherwise, any stock which has performed well and has gone up is bound to correct also. It's not like one-way ticket, either up or down. Especially when you got invested at 225 and the stock is trading at 860, I think you need to introspect a little bit and rethink about your strategy. I'm not saying that you should buy, sell, and hold because we don't have a coverage on Titagarh Rail, but it has been one of the best performing stocks as far as the railway related entities are concerned, and it continues to grow well on fallback of order book and execution. So on earnings front and on balance sheet front, there is absolutely no doubt that performance will reflect upon the earnings. The reason why I can't comment, Alex, is because we don't have a straight away coverage on Titagarh Rail.
Point. Let me very quickly get a view from Rajesh then, purely on the basis of technicals. I think so. Somebody who was bought in January of 2023, making considerable upside. Do you take some money off the table right now based on the technical levels?
But still, if we analyze the overall long-term structure, that is in bullish territory only. This is the second month where some profit taking is happening in this stock. But overall structure is bullish. Stock is still holding the 200-day moving average. So our advice would be to trail your stop loss now at 800 rupees. If it slips below to 800, then book some profit. Till stock is holding above 800, I think again stock may attract some buying interest and possible pullback we can see towards 950 to 1000 kind of level also. But keep trailing your stop loss at 800 would be the right strategy to protect your profit.
All right, next up, we're talking about an IT counter, Coforge, Gaurang. Now, this is taking a beating today in trade. It's down over 6.5%. Now, from a fundamental perspective, the recent news flow is just about the fundraise, which is, I think, about 3,000 crores or thereabouts. But what, now, this one, okay, this question is from Babu from Hyderabad and Suresh Babu. And they are sitting on an upside or a profit of 25%. Now, considering what's happening today to the stock, would you suggest sit on it, wait for a little bit longer because there's more upside, or would you suggest taking some profits off the table?
We have a coverage on Coforge for a pretty long period of time, Smriti, and the thing that we've seen is that mid-cap IT has outperformed large-cap IT for the last many quarters, and that continues to dominate. The reason why we are seeing this correction is its fallback of the news flow, and of course, there is certain anxiety in the market. What we understand is that fundraising would possibly enable them to lighten up their debt also over a longer period of time. And if you are in for a long term, then I don't think short term news flows or corrections should possibly compel you to exit the stock. We have a positive coverage, and I would recommend to hold on to it.
JBM Auto for the short term. This is a question coming in from Rakesh. And Rajesh, what's the view on this? I think, so we don't have a buy price, but then Rakesh says that they're at a loss of about 18% and it's a short term view.
So correction is already there, but stock, if we analyze on the longer term time frame, it's in bullish trajectory. Till stock is holding above 1800, 1790 kind of zone, I think you should hold the position. Some pullback action we have already seen in last couple of trading session. Looking at the pullback, if stocks manages to cross above 1950, then yes, possibly we can see furthermore extension of this pullback towards 2200 kind of zone also. So keep your stop loss at 1790 to hold your position at this moment, as medium term to long term structure is still intact on the bullish side.
All right. Thank you so much, Gaurang and Rajesh, for joining us today. Unfortunately, we're completely out of time on this edition of Ask Profit. And viewers, thanks so much for tuning in. If we were not able to take questions today, and I'm sure there's still questions pouring in, we'll definitely try and take them tomorrow. But don't go anywhere. Lots more lined up here on NDTV Profit for you.
Hello and welcome. This is Hot Money. I am Agam Vakil. Well, in this show, we take you through all the stocks which are buzzing in trade and have been the flavor of the season. But before that, a quick look at the markets. And we've now started to see that volatility return to the benchmarks. And in fact, at one point in time, the Nifty had dipped very, very sharply on an intraday basis. But we have seen a recovery from there. But it is still in the red at the moment. And so the weakness is there and the volatility is there for everyone to see as well. Let's pull up what's happening in terms of the constituents. So we do have some amount of weakness, and that's largely on account of your private sector banks. They're really not being able to make any sort of a decision as to whether or not they want to sustain at our upper levels, or are we in fact looking at that decline coming through. So when it comes to your bank specifically, ICICI Bank and HDFC Bank are weighing on the bank Nifty. Of course, on the other end of the spectrum, we are looking at some amount of strength in Tata Steel and Tata Motors along with M&M. So the auto pack is keeping, or rather providing some amount of support to keep the Nifty as high as it can. But there are a whole host of other stocks which are in fact weighing down on the Nifty too. What about the broader markets? Let's pull up what's happening with the some of your those indices. So the mid cap 150 index is down around 0.6%, and the small cap index is also losing out around 0.5%. On the whole, there has been a substantial amount of volatility in your broader market indices. And while some may in fact suggest that, you haven't seen a very, very deep correction in these indices, well, then they very well could be in some sort of a consolidation. The underlying stocks in some of these indices are looking at a battering of all sorts. So, in fact, there are already a lot of stocks which have lost about well over 20% in the course of the last 4 to 5 sessions. That said, overall, what about today? We are looking at Coforge, which is down around 6.8%. Now, here, of course, the management has come out with the QIP, and we are also looking forward to having a conversation in terms of the prospects of the company. But Coforge is looking at a decline around 6.5% right now, and that's largely on account of dilution of stake. Remember, Coforge is one of the handful of those companies which also has so far enjoyed a scarcity premium because of the number of shares out there in public. The quantity is a lot less as compared to any other. Prestige is down around 4%. In fact, you have Prestige along with Godrej Properties, because these are the two real estate companies which are looking at a little bit of pressure in today's day of trade. And then, of course, you have Persistent Systems, which is also under pressure, down 3.5%. And in terms of gainers, we now have Paytm make a reversal and is locked in an upper circuit of 5%. This again is one of those things that usually comes through. In some days it's down by just as much, in certain days it's up by just as much. There's nothing new here. And then, of course, there's Torrent Power, which is up around 3.7 on account of an order win. That's something that we are also going to talk about. And speaking of that, let's also tell you about what are the stocks and themes that we like to address in this show. So we're going to talk about Hindustan Aeronautics. This one has run up quite a bit, and it still continues to get new orders every single day. Then, of course, we have Torrent Power. This one has also run up quite a bit, and this one also tends to get a new order every single day. We are going to talk about the EV space specifically, because of the EV policy that the government has come with, and which has in fact reduced import duty, also opening a door of sorts to foreign players. And let's not forget, railway stocks continue to be in focus. We have new orders coming in for the likes of Railtel, and of course RVNL and Ircon are also there, among many others, which is sustaining their gains. So we'll be talking about that as well. And we are going to take these stocks up with Sharmila Joshi of sharmilajoshi.com. In fact, we have her with us here. Sharmila, good morning. Thank you so much for joining in. I'm going to start off with Hindustan Aeronautics. There's no letting up. This stock has gone from strength to strength, and it continues to gain more and more in terms of orders too. How are you placed in this one? What is your assessment on Hindustan Aeronautics, and do you think a fresh entry even at this levels would be prudent?
Just to sort of dial back a little bit, like what we've really seen with a lot of defense stocks is that you had that whole Make in India and that initiative, and you saw a lot of them get orders. and all of them have had a huge rally. So I think this year onwards, perhaps you need to have a bit of a differentiator going ahead. So you really now need to see that even within that basket, first it was the entire basket that went up. So now within that basket, what continues to sort of really have good order flow, which still warrants investment at a higher price, etc. And I think to my mind, HAL is one of those names. I don't know whether you should buy right now because the market is volatile and that could have its impact on the price of HAL as well. And again, I think that caveat stands true for all PSU stocks that while order wins are great, for them to translate into bottom line takes a fair amount of time because these are all very long gestation period orders and very large orders at that. So having said all that, as I said that if there were some stocks within the defense space that one should still be positive on, HL definitely is one of those. So perhaps the approach that you could take is start an SIP or see the general direction of the market before you decide. But yes, I think given the kind of order flow that we've seen, this is a stock that I continue to be positive on.
Okay, well, so from there on, we move on to the auto sector. In fact, in a boost for the auto and the auto ancillary space, the government has approved a scheme to promote EV manufacturing in India. And the new policy will attract global players as well as help India become a manufacturing hub. And we have a slew of brokerages which have come up this morning with their own view on the new EV policy. But I'm going to stop right there and get in my colleague Puneet to tell us a little more about the details coming through. Puneet.
Hi, Agam. Thanks for that. And as you correctly said, there have been a slew of brokerages which have written on the EV policy today. This is a big move. And they say, that, starting with Nomura, they say that the aim of the policy is to promote India as a EV manufacturing destination, and it will support the entry of the likes of Tesla in India. They see that the promotion of these investments will also lead to the EV auto components industry and the ancillary industry to boom. Finally, they see that unlikely to see any kind of impact on the Indian OEM space, specifically for Tata and Mahindra, since these vehicles will be upwards of $35,000 or roughly 29 lakhs. And they see that currently BMW, Mercedes and Audi might lose market share if they don't lower their any kind of price points. Finally, an important part is JLR could be seen and continue investing in India. And on the brokerage, they have Sansera Engineering with a target price of 1,300, Sona Comstar as well as Motherson Sumi with target price of 794 and 193. And for Citi specific, Motherson will be 133 rupees per share. Citi has mentioned that this would enable premium global EVs to reach the India market at a relatively lower price points, while MK has said that the entering of Tesla would kind of keep the uncertainty of slowing growth away and lead to companies like VinFast as well as Tesla's entry would lead to auto companies doing better. They have a preference of Motherson Sumi wiring among the space, which has a global as well as Indian exposure to all these companies. Back to you.
All right, Puneet, thank you so much for getting us those details with respect to what brokerages are making of that new EV policy. But Sharmila, how are you placed with respect to the latest updates in the auto and the auto ancillary space?
Well, yes. So, obviously, I think this was sort of long awaited because we've been talking of EVs, in the Indian context for a fair amount of time. And it was expected that they would, some kind of move would come for the space. And I think, as has been discussed, this is clearly sort of to pave the way for larger players to enter India. And, they've been given a minimum investment target. And if they meet that, then they get, the relaxation. And I think that's great news because it sort of, increases the ability of India getting newer technology for EV as a space. Having said that, I think, yes, as the stock prices indicate today. So I think the key question that you need to answer is, will this impact the existing Indian players? To my mind, no, because, I think that this is a market that's expanding. It's a very small and niche market as of now. And I think that this will definitely broaden. So not only will we have passenger vehicles, we'll have two-wheelers, we'll have trucks, buses, mass transport, as well as logistic getting addressed by EV. And I think perhaps to my mind, that is a more sort of a relevant space in the Indian context than passenger vehicle cars. So I would be positive on a whole host of stocks. I think definitely Tata Motors because of their JLR bit, as well as the fact that they're already in the EV space, definitely Mahindra and Mahindra. And I think another stock that I would like to add to that list is Ashok Leyland, because they have introduced electric double-decker buses in Mumbai. And I think, that, as I said, to my mind, is a very key area if you have a sort of, the public transport as well as delivery shifting to EV.
All right. So that's of course Sharmila's view on the whole the latest update with respect to the auto sector. But from there on, we move on to Torrent Power. Now, when it comes to Torrent Power, again, this one has also been no stranger to a slew of very large orders, the MOUs being signed with different state governments over the past few, I would say, months. And in the latest, of course, it's also received a letter of award to set up a 300 megawatt solar hybrid project. And again, this is just one of the many projects that it has had. What is also working out in favor of Torrent Power is that, it is shifting away from the coal-based and thermal-based power generation, and it is, the bulk of its new investments and the bulk of its new focus is going towards, largely solar, but to a certain extent wind as well. And of course, we also know about the kind of traction that it has been gaining, not just in the state of Gujarat, but also in certain other states as well. And because of which it is continuing to move from strength to strength. Sharmila, your view on Torrent Power, and how about investments even at these levels?
So, I think as you rightly mentioned, clearly the theme seems to be sort of renewable energy, whether it is wind, whether it is solar, hydrogen, and I think, which is also perhaps, there is growing concern for environment, which is why I think, EV story is also sort of gaining prominence, because it does mean better air within at least the cities which are hit, as you and I well know. So I think from that perspective, it's a great stock. But as you said, it's just a question of valuation. So while it's a theme I like, perhaps I would only hold back now because the stock is very highly valued. So if you were to see a dip from these levels, maybe I would think of entry, but not at this level.
All right. On that note, Sharmila, I'm going to take a moment to thank you for joining us and taking us